Hello student, today we are going to learn the process of accounting. So, before going to know the process of accounting, let me tell you what is accounting. Accounting is the process of identifying, measuring and communicating the economic information of an organization to its users who need the information for decision making. Now, we will see the process of accounting. The process of accounting contains some steps. Let's see what are these. The first step in accounting process is identifying the business transactions and events. Accounting identifies transactions and events of a specific entity. Now, what is transactions? Well, transaction is an exchange in which each participant receives or sacrifices value. Say, for example, purchase of a car for cash. And an event is a happening of consequence to an entity. Say, for example, use of raw materials for production. Whereas an entity means an economic unit that performs economic activities. Now, the next steps in accounting process is measuring the identified transactions and events. In these steps, accounting measures the transactions and events in terms of a common measurement unit, that is the ruling currency of a country. In India, we know that the ruling currency is rupee. Likewise, the next step is recording. Now, recording is the basic functions of accounting. In these steps, all business transactions are recorded in orderly manner. This recording is done in the book, journal, and other subsidiary book, say cash journal or purchase journal, etc. The next step is classifying. Classifying is concerned with the systematic analysis of the recorded data. Classification is done in a book, that is ledger. For example, there may be separate account heads for traveling expenses, or we can say advertising. Now, all the expenses under these heads, after being recorded in the journal, will be classified under separate heads in the ledger. Why is it so? Just to find out the total expenditure incurred under each head. The next step is summarizing. Well, summarizing involves presenting the classified data in a manner which can be easily understandable and useful to the internal as well as external users of accounting statement. Now, what is those statements? Those statements are trial balance, income statement, that is profit and loss account, balance sheet, that is your position statement. Now, let's see the next step. The next step is analyzing. This is concerned with the establishment of relationship between the various items or group of items taken income statement or balance sheet or both. Why analysis is important? Just to identify the financial strengths and weaknesses of the enterprise. The next step in the process is interpreting. Well, interpreting is concerned with explaining the meaning and significance of the relationship so established by the analysis. At present business world, all the above these 6 functions, that is identifying the business transactions and events, measuring the identified transactions and events, recording, classifying, summarizing and analyzing, is done by electronic data processing devices. The accountant concentrates mainly on the interpretation aspects of accounting. In fact, the accountant should explain not only what has happened but also why it happened and what is likely to happen under specified conditions. The last step in accounting process is communicating. Now, after the accounting information being meaningfully analyzed and interpreted, these are required to be communicated in a proper form and manner to the proper person. This is done through preparation and distribution of accounting reports. These are in the form of accounting ratios, graphs, diagrams, fund flow statements, etc. So, today we have seen the 8 process of accounting.